Hello and welcome to BananaCrystal.com. My name is Holly, and today what we're going to go over is how to earn dual interest. Specifically, I want to take a look at the Earn Dual Interest Calculator, which is going to allow us to model out some scenarios. Specifically, I'll use myself to start, and then that way you'll understand the flow of how you use this tool for your own benefit. So if you are on BananaCrystal.com, what you're going to do is go to Earn Dual Interest Calculator and click that in the drop-down menu. There's going to be a few quick questions here for you to answer. Like I mentioned, I'll go ahead and go through as myself and then teach you what the output is showing you and how you interpret that. So my gender is female. I'm going to put in my date of birth, which is 6/21/1987. I'm going to go ahead and look at maybe a little bit more of an aggressive amount per year. I'm going to look at 25,000. That is an annual amount, please note. So this would be, let's call it approximately $2,000 a month. So I'm going to put that in, and what I'll do is just attest that I have not been diagnosed with a terminal illness and go ahead and click preview. What you'll immediately see is the total contribution. Now, this is over the course of 10 years. These particular plans can be funded in any range from over 5 years to 10 years. We just model out 10 years, which is probably the more common model that people fall into. What you're seeing here is your total tax-free distribution. This is actually showing you what the cumulative amount of income that you take from the plan from a typical retirement age of 65 all the way to age 90. So you can see here a pretty robust variance in putting in that $250,000 to have a tax-free output of about 2.1 million. So essentially what we've done as a strategy here is we have paid the tax on the seed to forgive a much larger harvest, in essence avoiding about $1.8 million in taxes, which is pretty incredible. Let's go ahead now and look at what we're seeing here as far as this ledger. I'm going to have us read this from right to left, and then I'll scroll down and kind of get into it a little bit more. So on the far right-hand side here, this is your net death benefit at any given year. The reason you see this varying year over year is just due to the fact that as the cash inside the plan grows, that death benefit has to grow in accordance. So essentially what I mean by that is kind of envision the cash as having a rubber band around it, and that rubber band is representative of the death benefit. So as the cash grows, the rubber band grows with it, and as you take cash out, it constricts accordingly. So that's why you're seeing kind of a variance, and again, that is in an effort to always have the death benefit at a minimum relative to the cash inside the plan. This next column here, this is going to be your liquidity column. This is going to basically represent what you can take out in the form of loans for external investments, maybe cost of living. Realistically, whatever you choose to take the money out for, the insurance company is not going to ask you what your loan is for. That's a private transaction of your own. This particular column, you can pretty much account for about 90% of this being your loan accessibility that you can take out for the mechanism that allows for that dual interest capacity. This column here is your accumulated value column. This is the column representative of what the insurance company is going to use as your interest credit and will always remain undisturbed. What I mean by that is, let's take an example in year 5. Let's say that I took $100,000 out of my dual interest bank to purchase real estate, and that property cash flows me about a 15% return annually. So I'm very happy with that. Now, what'll happen is, let's say, just for the ease of math, you attain a 10% interest credit inside the plan. You would actually get a $12,700 credit into your surrender value and accumulated value buckets, irrespective of the fact that $100,000 is on the street working for you in another capacity. So that is exactly how that dual interest mechanism is going to work. This column here will make more sense around age 65, but this is going to show that tax-free distribution that you take as income, which we saw up here was kind of tallied in total up here. This column is showing you your annual contribution, again, about $2,000 a month or $25,000 a year in this example. So you can see that going into the plan for about 10 years. And this is, of course, the age of the insured and the policy year. Even though I'm age 34, this is my insured age of 35, and that's just because we're kind of showing an age range example for you here. Now let's scroll down and see a little bit more about the ledger. So you'll notice here at year 11 a pretty significant reduction to the death benefit, and that's due to the fact that we are actually really taking that rubber band down because there's no longer a need to accept more contributions into the plan. So we do what's called a structural reduction of the death benefit to the minimum level relative to the cash inside. And essentially what that's doing is having that fiduciary design adhere very strictly to the design so that the death benefit is minimized, thus giving the best environment for that cash to grow. So after year 11, you'll see there are no more contributions going into the plan. You can just see that interest compounding on itself beautifully inside the plan. Then I model at age 65, which is a pretty common retirement age. Now, granted, you could certainly start taking income at 45, 55, 60. This is not an IRS regulated plan, as we've learned. So there's no need to be forced to take income or be precluded from taking income because you're too young to do so per the IRS's determination. But what you will see is due to the compounding interest as well as the capital contribution that grew year over year, the total income per year is about $82,619, and I take that at age 65 all the way down to age 90, as I mentioned. And that cumulative amount we saw up here was just showing a tally of all of that income coming out of about that 2.148 million there. Now, as I mentioned, you can certainly take income at any time. Your money is still going to be growing and compounding in interest, which is evidenced by the fact that you can see, even though we're taking income and this number is getting smaller, this column is still growing and still serves as the basis for our interest credit, thus kind of creating, in my opinion, what I liken to a tax-free pension that you really can't outlive because the income is just perpetually generating at this point. The other thing I'd like to note is you do not have to take a linear income, nor do you have to take the same amount every year. That's just kind of limitation of how we can illustrate this. However, what you can do is, let's say, for example, in year or age 68, you need $200,000 out of the plan, maybe to buy a home or take a great family vacation, whatever that looks like, right? You can do so at any increment that you desire. Or you can even skip years if you want to take money from your taxable bucket if the tax year is more favorable. So essentially, how I really teach clients to use this plan is in tandem with their taxable investments as well. So what you're doing is, depending on the tax season in your passive income years or your retirement years, maybe you're taking income from a blend of both buckets in order to control your retirement taxes, or maybe you're leaning more heavily on your taxable income or your tax-free income, depending on the tax favorability of the year and just kind of all of the different factors that can impact that. But this is the tool, and I really encourage you to kind of play around with it and see what numbers are attractive to you. And please, if you'd like to see an official ledger, just click this button where you contact us to proceed. And what we'll do is we'll actually generate an official letter based on your input into the calculator and go through a screen share with you and really teach you the bones of the strategy and the black and white mechanics of it so you can become an expert just like we are. So this is the tutorial on the calculator. I hope you enjoyed it. If you'd like to learn more about the benefits of the dual interest bank, please feel free to go to the Earn Dual Interest tab and go to About Earning Dual Interest Program, where I have about a 30-minute tutorial just as a high level over all of the utility of this plan and some of the benefits. So I thank you for your attention, and I hope you have a great day. Thank you so much, and we look forward to talking with you. Bye-bye now.